It is March 6th, and this is the video log that takes $30,000 to $1 million. First, we're going to take a look at what happened today in the account, and second, we're going to discuss why you want to trade LEAP options and why, at least I think, they're very good. So we're going to jump straight into it. The account is down about $331. XK keeps going up. It's up 2% and a third. Apple down 0.5%, and these are the two big major movers today. Everything else is pretty much down. The markets overall lost about 0.6%. Uranium is about flat. Chemical holding strong relatively, and URA, which is the uranium ETF, uranium business ETF, is flat as well. Pretty much a non-event, but some losses, $300 down. The plan for EXK is to hold off and sell at a higher price here. It's at $259 right now. I'm looking to exit this position gradually. I've spoken in previous videos that I think that silver and gold run is not over yet. We're going to have one more leg up. And so I've exited 1,000 shares already, looking to exit some more. But as you can see, I sold 200 at 268 and 264 and 260. So I don't want to sell at 259. I want to wait until at least above 268 to sell some more shares. So that's the plan on EXK. And Apple just long-term hold, trying to accumulate, especially if it drops now. It looks like we might be starting a market correction. I don't know how deep it's going to be, but as it does happen, I'm going to look to roll over some of the SH, which is the market short. You see today I've gained 0.7% on it. I'm about even at the moment, but actually $3 return. And so as that appreciates, I'm going to look to roll over some of that into Apple stock or some dividend paying funds. We'll see when the time comes. I can't tell right now what I'm going to be doing in the future. So let's talk about leaps. And what are leaps? Well, they're long-term, expected stock appreciation, equity appreciation. That's what it stands for. Long-term equity appreciation or expectation, something like that. It doesn't matter. They're nicknamed leaps, and they're long-term options, usually from a year or more. So let's take a look at an example. So I like to trade leap options on Apple. I've already done it once, and I profited like $1,000 or so, which is really nice. Obviously, the stock has to go in your direction, but I'll tell you the benefits of doing that in a second. So if we look at, let's take a look at June 2020. So that's more than a year. And you can see some of the prices here. I like to sell puts if I have the cash, right? So let's say you have a bunch of cash sitting and you want to sell put. You don't have to sell on this expensive stock. You can choose a different stock, a cheaper one. And of course, this isn't investment advice. I'm just showing you guys some options, but you have to make your own decisions, do your own due diligence and research. So let's take a look at June 2020, and you can see the prices here. And so if I put up, what this means, if I put up, let's say $18,000, then I immediately get $2,050 back. Okay, so I've sold the option. I've put up the collateral of $18,000, and I get $2,000 back. So over time, as the price stays around $180 or goes above $180, this contract will depreciate. But I've already received the $2,000, so I can choose to buy it back if I want to, if I have the cash sitting around for a lower price, like maybe $1,000 or less, or I can just let it ride until expiration, and that liability will get eliminated, which is what I usually like to do. However, some other options, now that you have $2,000 worth of cash and you have this money working for you over this time period, over let's say a year, you have around $2,000 working for you, and if you divide it up by months, that turns out to be over $100 per month that you're getting. Basically, you can think of it that way. of liability decreased, right? But you get the money up front, which is a benefit. And why is that a benefit? Well, you can re-roll it in other stuff, right? You can buy additional Apple stock if you want to leverage your portfolio that way, but you can sell more puts on different stocks that are cheaper. You can do short-term options. You can gamble with it. You can do whatever you want. You can invest it in the S&P 500. You can buy treasury notes and collect additional interest on that $2,000, right? So let's say I've sold the option and I got $2,000 and I can buy this fund here, GSY, and then almost every day it appreciates just a little bit and it pays a dividend, right? It's just basically treasury notes. You can see the last dividend here was $21 monthly. So obviously it's not going to be that much on $2,000. It's $21,000 invested in this fund, or almost 22. But it will give you a modest return over the year plus that you decide to sell that option for and roll the money. You can put it in a cash account, collect a little bit of extra interest that way. So instead of having, around $100 a month, you can have $102, $103 or whatever. So you can play around with that money however you like, and you can reinvest it. And I think I really like that option rather than just buying the stock outright. Yeah, if the stock goes really high, let's go back to that option screen. So sell put June 2020. So if the stock goes up to 250, 230, you're going to be missing out on a lot of gains, but it's a conservative way to play the stock, right? So if it drops down to 160, no worries. You're going to be buying it at 180. You bought it at a high price, but it's the same as buying it at 180 now, except you have $2,000 extra. All right, so I think it's a really beneficial way to do it if you're conservative with your play. Obviously, if you're expecting massive gains, you can sell higher options like 240. The stock's been at 230 before, so that's you get $5,500 up front if you sell a 230 option. Just be careful because you have to put up $23,000 as a collateral, and also you risk buying the stock at that price come June. So if the price of it is 160, then obviously that's not a very good purchase. So you have to weigh in the pluses and minuses, the pros and cons. And once you make that decision, you can pull the trigger. I want to do this pretty soon with Apple, but I'm waiting for it to come off the intermediate highs right here. So right now it's sitting at, let's see it, $174 per share. It's been as high as 230, 232 on October 3rd, but also as low as 142. So I don't expect it to stay up high at 174 for too much longer. We've had a nice run here over the last couple months. I'm expecting a bit of a correction as well as from the overall market. And at that point, I'm looking to pull that money that's been in short-term treasury notes and inject it into selling an Apple put. That's the plan. That's what I want for. I'm not 100% sure that it's going to happen, but that's the plan for now. Okay, so I've done a little bit of overview of what happened today. I've updated you on the stock account here on the portfolio, and I've explained a little bit about leaps and how they work and what some of the benefits are and why you might want to choose to do it and why I like it. With that said, I think that's it for today. Hopefully I see you all tomorrow. Peace out.